The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, fairly quiet news day in terms of market-related news. Felt like we hit some resistance and took some profit across the wheat trade. Corn and soybeans were quiet. Livestock trade was quiet. Outside markets, a little bit of move up in crude oil in the Dow, but that was also pretty quiet as well. Cotton did go a little bit higher in December and March contracts, though, so one winner on the day. Let's frame this up, though, and talk about things. Joining us for market analysis, John Heimberg with Total Farm Marketing. John, good to catch up with you again. Hope you had a great weekend, and largely we came out of the weekend into Monday's trade. Didn't really have a lot to talk about. It was fairly quiet, minus that wheat market kind of finding some pressure across the board on Monday, John.
Yeah, actually, except very quiet day overall, mild losses, on the grain markets. Probably just what we call a consolidation day, as we're just getting ready for harvest pressure to kick in, or watching some weather models and seeing where things are going. We're kind of in that limbo land here between, report one at last week. We got the grain stocks at the end of the month. We'll see how the harvest starts kicking in. I assume we'll see a pretty good jump in that corn number, from 5% complete last week. We'll see where it is this week. As I'm hearing talk of guys are rolling and it's moving more north as we get to it. So that's going to be probably a limiting factor in the markets here, is going to be some of the harvest pressure. Plus, we'll start hearing some of those yield results that are out there. I've heard a couple numbers that have kind of makes your hair stand up a little bit in terms of sizes bean crop in some locations. But again, we got to see if that's consistent or anomalies at this time frame. So with that right now, the only thing I'm really kind of staying focused on is where guys are with their bushels, what's going forward. September came off for corn at $3.90, left 20 cents a carry plus into the December market going into this morning's open or last night's open. We still got another 20 cents a carry out to the March. Those things have me concerned for guys storing grain, so keeping those floors in. In soybeans, we actually hit a bit of a seasonal sell window tomorrow on some of these what we call research type trades. 13 out of the last 15 years, if you sell November beans on the 17th of September, you've been accurate and about the moves, about an average of 45 cents to the downside. So, and that usually runs through the end of the month. So again, I think those are things that I'm watching. Just kind of makes it hard to get real bullish here, but at the same time, the market itself just wants to kind of at least hold some value after a pretty good week last week.
Yeah, pretty good week last week. And I was happy that corn and beans largely held around unchanged with all that pressure in the wheat trade. At times we've seen corn kind of hitch its wagon to wheat here in recent months, and luckily didn't necessarily do that on the day Monday, as to your point, kind of consolidating. And largely it feels like this market now, barring something crazy, it's going to wait for yields to come in here, wait for that end of the month grain stocks report, and largely could churn around here and maybe go down and test some lows before we have that seasonality kick in October through December here in the row crops, John?
We'll have to see. I think some of it's going to come down to just the movement. Do bushels get going somewhere? Do we get them down the river? I think that's something I'm watching very closely. Export inspections came out today for last week, and corn's not off to a great start here for the marketing year. Now we're 2 weeks in, and being down 40 million bushels in 2 weeks is a very easy to do number. But it's a 24% reduction. The USDA is thinking we're going to be over for next year for export shipments and exports. So I think that's a very good reflection of the river. I also do think the time of year, this is the window we start putting beans out more than corn. But even the bean number was a little bit disappointing today in the 400 million metric tons. So that's to me is maybe reflective that we aren't getting bushels moved around. And with a strong harvest coming here, upper Midwest, that could really log jam some issues that could affect the cash market, So those are things I'm watching. That hedge pressure may come into play here. You're going to see probably more activity in the cash market than maybe the futures here. Just feels like we're at the top of the range here at 411, 412. We kind of hit there last week. We hit the wall. Today we're off it a little bit. That 385 still a big looming bottom in this area. So don't be shocked that we kind of work in this area until we have a better, clear picture of what's out there in the front end. Over on the soybean side, still very concerned about that market. Just global supplies, you're looking at a stocks to use number that is the largest realistically in history. In terms of available global soybeans that are out there, over 120 days of supply. The global soybean market is very, very full. You get a comment today from China that their their sow herd's down 5.4% last month. Okay, that's a lot of soybean meal demand that could get limited. So it's an interesting situation. Now we picked up a little Brazil weather premium, I think, here just as caution, but it sounds like rain's going to kick back in here in October a little bit more. Throw in there an inspection number that, already year to date, we're down 16%. And most in the analyst world think the USDA's targets are too high on the demand side for soybeans, given the global competition. So I think that $10 barrier is going to be a big number. If it can't hold, I think you could really see this bean market start digging again to really try to pick up some demand or see some selling pressure, especially with harvest kind of kicking into full speed here.
What about the position of funds and fund managers? We saw them start to reel back in a little bit, cover some shorts. That was noted on Friday's CFTC report. Does this feel like an opportunity here where funds are maybe realizing that, hey, it's maybe no reason to be so short in commodities, and they're maybe starting to put a little bit of money back there versus maybe having it in the stock market in particular with all the Fed business that we got this week, et cetera? I mean, your perspective on that, John, are we seeing funds start to get a little more friendly commodities?
I'm still not sure where that drive is going to come from. Okay. You got a lot of concerns regarding the Chinese economy. Obviously, you still got concerns here, maybe with our economy. I know the stock market's really enjoyed this possible cut of interest rates that's coming on Wednesday. Now they're even chatter that near 70% chance it could be a half a basis point getting cut this week. Boy, it would be really interesting to see the reaction if they decide to wait one more month. The stock market would have a really bad day in that regard. So, plus we also do have some volatility in the equity markets. This is also called the witching hours on Friday, which is where stock indices as well as options all expire in the last hour of trade for the September contract on Friday. So that could be another little piece of energy into that equity market this week. So keep an eye on that. So with that being said, just kind of looking going forward inside of the grain markets and the funds movement. The most disappointing thing, I think, in the fund movement, them shaving nearly over 125,000 contracts off in the last couple of weeks, is the pure fact the corn market has rallied, 385 to 410. And, they've taken a position in the 1st of July from 350,000 short to now 130,000 short. And if you go look at where we were at the 1st of July, in December corn, we were at 426. So realistically, they've taken that position, lifted well over half of it, and we're still down 15 cents from where we were in July. So why is that to happen? Because obviously the producer side of it and the selling side of the producer was the exit point for them. So what's scary now is we don't see good demand. We see demand tail off. South American weather turns good. Now they've got the energy again to go ahead and push back in. Now, again, those reports are put together on Tuesday. So think about Wednesday, Thursday, Friday, today's quiet action, how much more the funds have taken out, and counting tomorrow's trade. And that's when they report the next commitment of trader numbers. So I wouldn't be shocked, given the chunks that we've seen them take off, that they may even have that position by tomorrow, barring a really bad selling day, well over or well under 100,000 contracts, taking another 20, 30,000 out.
Good thoughts. Some things to watch this week, no doubt. One other quick note in the wheat markets, too. I was looking at some of the charts, and it feels like particularly Chicago Dees SRW futures really feels like $6 on the board is going to be a major resistance here as we kind of bumped up against it and failed and kind of retraced from that on Monday. Does that feel like to you that round number of $6 feels like that is going to be a big resistance here in the short term?
Yeah, that's huge psychological resistance. Obviously, it's same thing when you get through corn and we get back under $4. Look out! The easier flow to the sell, that $10 number in beans. big number. If we cross that, we head to 9, that type of thing. Same thing with wheat. You get through 6, you're on your way to 650. Now, let's think about why we may have rallied here. First off, Ukraine, Black Sea region, European dryness, quality concerns that got the rally started, got a little bit of money flow. The end of last week was the chatter about President Biden meeting with Britain and NATO nations, possibly allowing the Ukraine to use NATO missiles into Russia, which obviously, Putin stepped up and said, hey, that's an act of war. So I think that had the wheat market a little bit antsy with that acceleration of possibly some tensions if something like that were to came. Plus, you throw in that missile hit by Russia on that that wheat carrier last week. It just puts a whole bunch of different little thoughts. I think it got the funds uneasy. Now let's still get back to the big picture. Global wheat prices. Supply is still relatively tight on that global scale. You got some chatter about India looking to ban, with their import situation. Do they need to bring some imports in? I think that's the third story on the pile that was a little bullish last week. But how far can we go? Again, U.S. wheat prices compared to the world are obviously still very expensive. You still got Russia, Ukraine quickly putting wheat onto the market in order to help fund that battle that's going on, or the war going on in that region of the world. And they're continuing to undercut the market in terms of their price in order to get revenue. So those things are all limiting factors going forward. Nice little rally in the wheat market. I hope some producers hit it with some selling here if they had some bushels left over. Again, if you want to keep a call strategy in, bull call strategy in the longer term in case something does escalate into a bigger thing, I don't think that's a horrible marketing plan.
John Heimberg with Total Farm Marketing is our guest analyst here today on Market Talk. Let's go to livestock trade, John. Kind of quiet in cattle and hogs on the day Monday, along with most of the grains. Let's start with the hog trade, if you don't mind. What are some things you're watching there currently? Anything big stand out to you here middle of the month of September?
It's kind of one of those windows where we start seeing all the hog market acts. Typically, we're stronger into October expiration, but I'm not liking the direction in the retail side as well as the cash market side right now. We had hogs down to the $93 handle last week in terms of pork carcass value. Cash trade continues to slide, and the index has been down, I believe now 5 straight weeks, and starting with another 48-point drop today in the cash hog index. So today felt a little bit of technical in nature, that we were now basically range bound with that 77 area on the October contract as the floor. We got 81, 82 on the top side, and maybe we're just going to bounce in here at this time frame. So that's one of the biggest things I'm kind of focused on right now, is just kind of where the money flow is in that hog market. Obviously, with concerns regarding the consumer, do we start seeing more of a shift to the cheaper pork products? That's something we'll have to keep an eye on here as well. But at least the hog market right now looks like it's trying to find a little bit of a bottom. Nice little trade up. Would like to see hold those highs of the day today, but at least we got back above those moving averages. A 200-day up top, that October contract around 81.5. It's going to be a pretty big barrier to get through, at least at this time frame. But so it looks like at least we got a little bit of a sideways hog market. And if we can get some fundamental strength in terms of those retail values, get that cash market to stabilize, then maybe there's some room for this market to go higher. December looks a little undervalued to October, being down $7 under it. And then maybe that's something we'll start seeing that spread between the two narrow out.
How about that cattle trade? Pretty quiet there to start the week on Monday. Last week had some interesting notes between futures and cash trade. What's your perspective on cattle here middle of the month?
Right now we're still got some of the same concerns out there. Where's the retail values at? They continue to slide last week, a little bit softer on those choice carcasses. Lease cash trade found a little bit of footing, steady to $1 higher based on the region and where your previous bids were the prior week. But the cattle charts really had kind of a tough close on Friday. Didn't like the price action here today as well. We had a chance to get a little bit of positive gain, slipped all the way down. Again, 2 days in a row, started counting Friday that we had a good start to the day and a not so good finish. Feels like we're at a point here, this cattle market's hit a bit of a topping point again. And wouldn't shock me, we see a pretty quick break back down to that October 174 window, December 173, 74 and a half window, which are those most two recent lows. So I'm kind of watching that, just the way the money flow and the chart's kind of acting, especially the last couple of days, that if this thing breaks. Now we're building a little bit of what I call a declining wedge pattern. If you look at it, our floor is solid with that double bottom. And then we're starting to see those highs continue to drift a little bit lower every single time, tightening up that wedge. And we'll get to a point where this thing will want to break out either one way or another out of that possible pattern. As a producer, if you've been sitting on some defensive hedges, if we get down to that bottom end, might be a great spot to move some money around and then put a safety valve in case this market wants to pop back, break through and really fall apart. But at the same time, too, if we come out of that wedge and we pop back to the high side, because the fundamentals in terms of cattle numbers are still friendly, at least that way we got a little bit of money off the table, reposition your floor, and let your cattle work to the upside if the market wants to rally.
Should ask you about the dairy market as well, as been somewhat volatile here as of late. What's your take on what we're watching in the dairy trade right now?
I'll give you a quick 30-second answer. Great prices for cheese, near record highs. Butter put in a record high spot price here just recently, but we got up in that $24 handle, traded there today before we dropped out of the market here. Good value out there for the dairy producers. Make sure you're taking advantage of it because, again, right now it's about lower supplies, lower cattle numbers, good demand, but the dairy market has a tendency to correct itself very quickly as some more cattle come online.
John, as we wrap up here today, final thoughts, anything you'd want to add for producers listening in here today?
Yeah, I know you're going to get busy. Biggest thing in the grains for me here, obviously with the combines rolling, if you're going to be putting things off the combine or storing things out, make sure you weigh those costs, protect that carry. To me, options are cheap right now, putting 420, 430 puts underneath the bin out into March. If you're going to hold that grain that long, especially if you decide to play a basis contract, make sure you cover your floor, lock in that cash price, then leave the bushels open to the upside. I just still think that's a great way to go in this environment because the market, like we saw last year, will have a tendency to want to bleed that carry out as we go month to month to month going into the spring.
John, if folks want to reach out to you for a conversation there at Total Farm Marketing, what's the best way to get a hold of you?
Sure, love to chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And again, don't forget that website of ours, totalfarmmarketing.com.
Always good to talk with you, John Heimberg from Total Farm Marketing. Thanks for being with us here on Market Talk today. We appreciate it.
Have a great day.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.